Folks, I want to talk about the earnings season. We just started. We've only had about 10, 12% of the stocks in the S&P 500 report. But with that said, we've had some big bank stocks report. We've had Morgan Stanley, Citibank, Bank of America, Wells Fargo, and Goldman Sachs. Now, we've had a bunch of smaller stocks report too, but I want to give you the picture on the bigger ones because, in my opinion, bank stocks are going to set the tone. And we still have a few weeks of earnings, and they're coming out pretty quickly. But bank stocks, especially with the low interest rate environment, have interesting data come out. So let's start with Citibank. I picked them randomly, the order of the ones I'm going through. There's no specific order to any of these. So Citibank, we're trading above the 50-day moving average. We're certainly trading above the 200-day moving average. It looks like we peaked out a few days ago prior to earnings, and it looks like we came down a bit, but the actual number was $1.90 per share, and the expectations were $1.82 per share. So we beat expectations, but not by a large margin. And what I'm seeing right now is the market is turning a little cooler. This is probably going to be a descending triangle, and the odds are that we're going to touch the 50-day moving average before heading up. But Citibank numbers were not bad, and I can't say I'm not recommending the stock, but I would like to wait for a pullback. The fact that it didn't beat earning expectations is not positive, and we could expect some sideways choppy action. The reason we saw the rally because the expectations were really strong, but it didn't beat it by a few cents. They weren't really bad, but they were below estimates. And remember what I always tell you, Wall Street does not care what the number is. They compare the number to the estimates. The estimates is where the money is. And the estimates were $1.90. We came in 8 cents short. So that's Citibank. Now let's look at Wells Fargo. Wow, Wells Fargo does not look good at all. Wells Fargo is trading at the 200-day moving average. It was trading at the twilight zone ahead of earnings. But as soon as earnings came out, the stock said, see you later. And what I would do right now is if I was trading the stock, I would wait for a pull-up back to the 50-day line or fill this gap right to the $51 level, and then I would go short. The actual numbers, again, were 93 cents a share compared to $1.12. So we lost the number based on about 19 cents. We were weaker by 19 cents. So Wells Fargo, again, similar to Citibank. Nothing great, nothing bad, but a little off, but this stock is turning south. Next, let's look at a giant, Morgan Stanley. Morgan Stanley, I love Morgan Stanley. It's one of my favorite banks. The bank outperformed Wall Street. The expectations were 98 cents a share. The actual number was $1.20 a share. They beat expectations by 22 cents, which is substantial. I mean, really substantial. The stock was trading near all-time highs. It's now consolidating. I like the fact that post-earnings, it hasn't really delved down into the gap. The odds are, even though it's overbought right now, I could tell you just by looking at it, it's overbought. As long as we stay near these levels and don't fill the gap, the odds are we will go higher. Even if we do fill the gap, I would feel comfortable buying the stock around $52, $53. I don't think we need to wait for this stock to pull back to the twilight zone. That's the level between the 50-day and the 200-day moving average. I'd really like for us to see this trade higher, and I think we're going to see upside. Out of all the large cap stocks, I believe this one had the best. It actually did. It had the best numbers. So I like Morgan Stanley. I'm not a huge fan of Wells Fargo and Citibank. Well, let's just say it could be a little better. So far, out of these three, Morgan Stanley's definitely the good one. But we still got two more to go. Bank of America, numbers came out slightly better than expected. We're still trading above the 50-day moving average. It looks like we're going to bend. The number came out at 74 cents a share. The expectations were 68 cents a share. The number came out at 74 cents a share. Not that great, but not that bad. But I would say as of right now, without looking at Goldman, Morgan Stanley and Bank of America are the two top ones. I really like Morgan Stanley, but for the most part, banks have done so-so. But you got to take into consideration two things. The positive is interest rates are near historic lows. I'm surprised any bank is beating expectations. And number two, keep something in mind, and this is very interesting. With interest rates being low, there's less liquidity coming into the market as well. And a lot of that liquidity is institutional and goes towards banks. So that's a double whammy against bank stocks. So banks are having a hard time. They're trying to run with a scalped leg. All right, so that's Bank of America. Now let's talk about the biggest, Goldman Sachs. Goldman Sachs did not do well, but the price is better than expected. It's actually shrugging off negative earnings by a little bit. We peaked at about $2.50. The actual number was $4.69 compared to $5.20. So although I like the way it's consolidating, it looks like it's setting up for a triangle. As long as we don't have more negative news, we can just move sideways and move higher. We're long ways above the 50-day moving average, and it looks like the stock has more upside. So to summarize, Morgan Stanley's the best one, my favorite in all of these, and it had the best numbers, followed by Bank of America and Citigroup. Morgan Stanley, Bank of America, and Citigroup outperformed. Wells Fargo and Goldman Sachs underperformed. All in all, only one of these stocks, Citigroup, Wells Fargo is trading below the 50-day moving average. Every other stock is still trending higher. Some not so much, some higher, but most of them are above the 50-day moving average. And I'm going to tell you, I like what I'm seeing. Also keep this in mind. Bank stocks are going to begin pricing in the expectations of Q1. That's the next quarter. And in this case, both the revenue and the EPS is expected to be positive. And that's going to be the first expectation quarter with positive earnings in I think 3 or 4 quarters. And that's going to be big, and I think that's going to give us some upside. Right now, I would be slightly bearish on bank stocks along with the rest of the market because momentum levels are just out of this world. But overall, I'm quite happy with how large banks performed. Several exceeded expectations, and so far, earnings are turning out slightly better than expected. As a matter of fact, earnings per share is about 70% better than expected right now. So that's fairly positive. And revenue, I believe, is 30% better than expected, but revenue expectations were pretty solid. Earnings per share, soft. So expect a little more volatility, expect some downside, but overall, I'm quite impressed with what I'm seeing with earnings so far, and I think we're going to see more upside, especially if interest rates stay at these levels or have an intent, show some intent to go higher, which will happen if China and U.S. begin resolving their differences and going towards phase 2. Stocks will begin appreciating that. Interest rates, Fed will stop holding rates back, and we're going to see banks make more money because rates will be higher. And that's what banks need to make more money. But I am very impressed with these numbers. Even with Wells Fargo underperforming by 19 cents, it still could have done a lot worse. Hope that helps. Folks, yes, volatility is likely right around the corner. But for traders, that can be a great thing. Think about it. You can make larger returns in a shorter amount of time. More volatility, more potential for profit. In fact, I even saw this coming. Increased volatility is one of the predictions that I made in my comprehensive 2020 trading blueprint. I told you so. In the report, I also spell out my complete financial attack for the next 12 months. It's how I plan to double my entire account by the end of 2020. You can access it by clicking the link below, but it's coming down soon. Remember, January is almost over, so I recommend you check it out today. Click the link below, get all the details now. Talk soon.